Good afternoon, and thank you for joining our panel. Joining me on this panel today is Elena Seba. She's the Secretariat for the Kenya Pension Scheme, the DB-NDC Pension Scheme, and also Solomon Kipsang, who is chair of the MTRH Pension Scheme. Our other two panelists are Larry Bosley from the New York City Retirement Fund, and Jonathan Stitchberry, who's chair of the Fund Managers Association, as well as the CEO of Sanlam. With that said, we are going to talk about our panel. And today, it's about learning. Our panel consists of members from U.S. Institutional Pension Fund, as well as from Kenya Institutional Pension Fund. And we are going to get the perspective from the two sides on investing in infrastructure. The goal of our panel today is to get their perspective on infrastructure, what they think about infrastructure. Are they thinking about investing in infrastructure? And if so, why? And if not, why not? We're going to talk about some of the pros and cons of investing in infrastructure, as well as co-investment opportunities for investing in infrastructure. But before we go on, I always like to highlight, because as a former pension fund executive myself, I like to highlight the role of pension fund trustees, pension fund executive, pension fund managers, secretariat, fund managers. Their key goal is to preserve and protect the assets of their funds for the benefit of their participants. The second key goal is to grow the assets of their fund, and to do so with measured risk. Pension funds also need to be diversified, which tend to serve as a risk mitigation tool. They're looking for higher returns, especially from the US, where most of the pension funds are underfunded, and we've been in a low interest rate environment for a very long time. That has increased the need to look beyond the borders for infrastructure investments that would generate higher returns. So with that said, I'd like to talk a little bit more about the pros and cons of investing in infrastructure. In Kenya, for one, the returns of infrastructure is higher in most cases than the regular government bonds. Infrastructure is uncorrelated to most other asset classes. So if diversification is a key, this is the sector you really want to consider. Infrastructure also provides great impact to the community. It provides social and economic needs for local communities. In terms of cons, there are risks, of course. As we all know, there's risk in every investment that you get into. And some of those risks, just to be clear, are political risk, currency risk, liquidity risk, and otherwise. But having said that, pension fund executives and trustees and fund managers have learned to navigate through those different risks. They've learned to measure those risks, and they've learned to bring in the additional resources to guide them in making that decision. So with that said, I'd like to highlight something that was said earlier this morning about, earlier during the day about Africa, and this was through the Mercer report. A statement I picked up from there was, Africa is an infrastructure and real asset investment destination. I will repeat that because it's so profound. Africa is an infrastructure and real estate investment destination. So I say this for my colleagues in the US, as well as for my colleagues in Kenya, because Africa is growing, and we know that. right? There's a population explosion in Africa. And that population explosion is increasing the need for consumer products, increasing the need for renewable energy, increasing the need for for transportation and otherwise. That urbanization, and not to mention the free trade zone, is increasing the need for infrastructure development. How do we get reliable Wi-Fi into the homes? How do we get affordable homes? How do we get student housing? And how do we get them with reliable electricity to provide reliable Wi-Fi? So with all of that said, it all leads to where? Infrastructure. So with that said, having stressed the need for infrastructure, having stated that Africa is an infrastructure designated location, I'd like to now turn to my panelists and have a few questions. Elena, if I can start with you, in a few words, could you tell us about your pension scheme, the size of your pension scheme, who it covers, what type of assets do you currently hold, and if infrastructure is one of those assets that you hold? And please, if you could be more specific, I would appreciate that.
Thank you, Rosalind. So we manage, as part of the Secretariat, we manage two schemes. We manage the defined benefit scheme, which is closed, and we also manage the defined contribution scheme. So in terms of fund value in Kenya shillings, both are just slightly over 8 billion shillings. Well, each of them is slightly over 8 billion shillings, which probably translates into about 80 million US dollars. And in terms of the asset allocation, 80% of our DB assets are in traditional investments. So that is fixed income and equity. And sorry, that's 70% of the DB. In terms of the DC scheme, 80% is actually in traditional assets. So the only alternative investment we have in both schemes is property. So until probably a few months ago, we were not invested in infrastructure, but now I'm happy to say that we are. So we've actually invested in two different infrastructure investments. Our DC scheme is investing in the Kenya Roads Annuity Lot 3 project, as well as the Acorn REITs. And our DB scheme is actually investing in the Kenya Roads Annuity Lot 3 project.
Elena, you just mentioned investing in the Acorn REITs. Is that a recent investment? And would you happen to know how much was allocated to that investment?
Yes, so if I'm not mistaken, I think probably in Kenya shillings, 143 million, I want to say. So roughly 1.4 million US dollars.
Wonderful, wonderful. Thank you so much for that, Elena. Solomon, if I could ask you the same question in a few words, can you tell us about your fund, who it covers, what size it is, what does your asset allocation look like, and is infrastructure considered as one of your investment? And if not, is it something that you're looking to invest in?
Okay, thank you very much, Rosalind. Just as you rightly put it, my name is Solomon, the chair MTRH Staff Pension Scheme. And our scheme is purely a defined contribution scheme. The size of our fund as at the moment is about 8 billion. And I think it is just the same as what Seba said. We have actually been concentrating with the traditional, of course, the asset classes. But I think in that outlook, we feel like we might not be actually getting that very good return. because as you well know, as a trustee, of course, we have that target to provide and to actually make good return to the members. Of course, that is the promise that we always do. We don't feel like that is actually, we have been achieving that, because like for the last 3 years, our return has somehow been constant. But I think even with the coming in of the COVID-19 pandemic, I would want to believe that it has been a blessing in disguise, because we have also tried to look into other new options. We have tried to look into other alternative investments that may actually bring a difference. The counters, we have really concentrated in some of the counters in the stock market. And in my perspective, and also on behalf of the board, is that it looks like we have limited counters. And the other option we have also tried is we have done a bit of property, but we actually have not get a significant return. And during even this, I think that is why we opted for, doing this Econ REITs. And I think that was about the first quarter of this year. We did a very small percentage of our fund, because if I can tell you the amount of money we put into the Econ REITs, it was about 31 million. So, but I think that was basically based on that it was a new alternative, and we may not have had enough information. We don't have so much statistics about its performance in the market. But all the same, it has been an alternative investment. And I would also say that my biggest belief in participating in such infrastructure investments is that apart from that financial return, we also get that social attachment. You can imagine building up a hospital, building up schools, participating in construction of roads. You've rightly put that, as Africa, there are very good infrastructure plans that are coming up. So we believe as pension schemes, if we participate in such, we may end up, of course, getting that return. And apart from that, of course, getting that social attachment to, of course, our members and the people and the stakeholders around us. Thank you.
Yep. Thank you, Solomon. And something you mentioned, which is higher returns. It's something that we are well aware of, that the market is actually not returning what was expected. Most often when you did your asset allocation strategy, and that has increased the need to look beyond traditional markets for other alternative assets that can generate better returns for your portfolio. So it's good news to hear that you are considering it on both fronts, from Elena and from Solomon. But if I could ask you this, if you were thinking about looking at opportunities, say opportunities in maybe transportation or road development or affordable housing for the general public, what process would you follow from your process, from your policies, from your schemes policy? What would be the process for your respective schemes to embark upon investment in infrastructure? Elena, can you take that?
Yes, sure. So basically what happens with us is any alternative asset opportunity normally comes to us either through our fund manager, through the project sponsor or promoter, or through the Kenya Pension Fund Investment Consortium. So when they speak to us on these projects, we look at them as a board and as a secretariat. And if we deem that we are interested and it does make business sense, we then proceed and ask our fund managers to give us their investment opinion. Now, for a lot of alternative investments, we do require legal and financial due diligence to be undertaken. And once that comes in and we're happy with the results, we can then proceed to invest.
Thank you very much. That is very thorough. Would you make an investment without the approval of your fund manager?
No, that our regulator does not allow for that. So we do have to go through our fund manager.
Great. Okay, that's good to know. Solomon, same question for you. To get you to where you want to be, to get you those higher returns that is much needed by the pension funds to meet its obligations, what would be your process if an opportunity was to land at your door? Opportunities in the areas that we mentioned, transportation or in energy or in water projects, but impactful opportunities. What would be your process to navigating through with your board to get into yes on that opportunity?
Okay, very well, Spencer. I think as a board, of course, as a scheme, we do have service providers. In this sense, we have the fund manager. And of course, our fund manager, the investment managers that works with us, we have actually given them the burden and also the leeway to do anything and everything possible to see into it that any opportunity that comes forth that we may actually invest and get something, a good return, they have to provide to us. So of course, apart from us engaging them on quarterly basis, we have a direct engagement to them, especially when there are available opportunities out there. But I would also want to say that, of course, as a board, of course, we are guided by the investment policy statement, which we think that we develop it, properly develop it to allow us, of course, access such opportunities. And when such opportunities actually come in, I think we have a very good process. We have, this policy allows us to engage the fund manager, get more information through the fund manager. And if we, apart from the fund manager, again, of course, there are promoters, just like Seba said, because, you know, my trustees would actually want to be well informed before making any decision. So I would also want to say that part of that process will also allow us doing a due diligence, because of course that should actually back up the decisions that are made and resolutions that are made in the board. So we believe we engage all other relevant stakeholders in the market. Of course, even our administrator, again, must also do something about it, so that we feel like every stakeholder has participated, and the resolution that will be made by the board in investing in a particular opportunity was actually agreed upon, and we will be well protected. Thank you.
Thank you for that detailed explanation about your process. Let me ask you this. What are your thoughts about risk? And again, risk is a very broad subject and it could take all day. But perhaps the reason for focusing mainly on short-term or on market securities are because they're short-term, they're not long-term, and with that you perceive less risk associated with them versus the long-term projects. But for diversification purposes, I think you are considering looking at infrastructure investments. So when we talk about risk, we talk about hindrance as well, right? So right now it all sounds very positive, but I'm just wondering, what would it take to move the needle for both your respective schemes to actually investing more in other infrastructure projects, as we mentioned earlier? And what would be the board tolerance? What would it take to get there? And that leads to due diligence, right? So to piggyback on that question, how do you conduct your due diligence? How would that be conducted? And who would you rely upon to conduct that due diligence for you? So it's a packed question, but Elena, if you could just take that away.
Yeah, so basically, the financial due diligence is undertaken by our fund managers, and the legal due diligence is undertaken by our legal advisors. To speak a little bit about the risk is, given the unique nature of our schemes, so we have the DB scheme that is closed and we have the DC scheme that is aging. So we can't really put money into infrastructure projects and then wait the entire duration of the life cycle of the project to get it back. So in terms of reducing risk, we do look at projects that are already operating. So we already have that knowledge that it is generating income. We can probably project how much more income we're expecting to get. So that's one way we address it. Other ways that have been addressed, at least in the projects we've been looking at, is through credit enhancements. So we have some portion of, like, if we're investing in debt, for example, there's a portion, like 100% of it in one instance has been guaranteed. So that gives a level of comfort to trustees that yes, it is a risky project, but we have put in place measures that will help protect us. Thank you.
Thank you, Elena, and that's a very good point, the credit enhancement. Solomon, do you feel the same way? And how is your scheme looking at risk, and what will it take to continue that thought process of investing in long-term assets?
Very well, Spencer. Thank you for that question. Basically, of course, one thing we have also made ourselves to understand is that, of course, any venture that promises a higher return, it must also come with some risks. So I think that is well clear with the board. It is well clear with us. And but at the same time, you know, we wouldn't actually remain the same all the time. But I think I actually pride myself with the nature and how, you know, the nature of my scheme, my membership, the age profile. I think a good number of my members are actually below 40. So if you look at that age profile, that is between 35, let's say 35 to 45. I mean, we have a good number of membership that actually gives us a leeway of even investing in portfolios that we believe are actually riskier. And again, because this is actually spread over time, apart from, of course, that idea of diversification to spread risks again, I also do believe that with the age profile of my membership, that again will also serve us. Of course, it is a way of managing that particular risks. So we also believe that doing this, because necessarily, even investing in such alternative investment may not so much, it is actually a small portion. Like I told you, what we have done with Econ REITs is about 0 point something of our fund. So we do believe the risks we will encounter could actually be manageable. Thank you.
Thank you very much. And that's the key word, right? If you are going to invest in long-term projects, invest in, and all investments come with some level of risk. But both Elena and Solomon mentioned having credit enhancements. It's very important to moving that needle. Having other risk mitigation in place are all very important to moving that needle to investing in long-term projects, and having the return assurances of that steady return coming into the pension funds to meet those liability needs over the years. Very important to get into, yes. So I'm very happy with my panelists today to see that they are moving in the direction of not only diversifying their portfolio, but doing it in a manner where it provides the necessary protection for the assets of their portfolio, while looking for ways to generate higher return and generate steady return. And I keep coming back to it, providing that impact to the community. Because, you know, development starts at home. And it starts with Kenyans for Kenya. It starts with Americans for America. But at the end, we're going to go across borders, and we're going to go across the waters. And co-invest, because that's also big, right? We have a large percentage of pension assets in the US. And most of those assets are investing in the stock market. And most of the pension funds have high underfunded liabilities. So they too have needs for higher returns. And I believe they will find those higher returns, those steady returns coming from investing in infrastructure through co-investment opportunities in Africa. So having said that, I believe, I don't know how we are doing with time, but we may be approaching our time. And I just like to ask a few, not more questions, but just ask the both of you, Solomon and Elena, if you can share with us something that over the past year that you have been proud of.
Thank you. I think I'd like to just say that it's about investing in infrastructure. So this is something we've been looking at for several years, about 5 years now. And also being one of the founding members of the Kenya Pension Fund Investment Consortium, the projects we've invested in came through KEPFIC. So it's almost like a full circle kind of thing that, you know, here we started something with one objective and we are achieving everything we intended to achieve. So yeah, that's what I'm most proud of. Thank you.
Thank you. Thank you. Thank you. And Solomon, same question for you. And actually, I will give you 2 questions, and one would be, what keeps you up at night, and what are you most proud of?
Thank you. Thank you very much, Spencer, for the questions you've actually directed to me. Maybe I can start with, of course, what I am proud of. Of course, I guess this could also be some of the benefits. But again, I want to say that, of course, I think I am also growing to be a proud chair for the simple reason that for this particular year, I've actually been able to, of course, to identify, you know, engage and even participate in some of the alternative opportunities. And my conclusion is, of course, there are opportunities out there that are actually good. So I will say this because when we participated in the Econ REITs investments, I think we got 2 benefits. Number one, we were able to get, of course, the quarterly, you know, this is about rent payment and what have you. So we are able to get dividends. And secondly, again, of course, capital appreciation, because, you know, we put in some money, but as at now, of course, that money has actually increased. So I think I am actually proud of that. I am proud of this particular venture. And it is my belief that, of course, this forum, through other very relevant consortiums, will also be able to come up with opportunities that will help us and actually make a difference. So what keeps me, the other question was, what keeps me at night, up at night?
Yes. Yes.
But mostly I sleep at night, but maybe what I can say is that, of course, you know, the positive impact and of course the positive impact we have made in the society through such through such forums we have been given. I think when I think of them, you know, sometimes you don't sleep, you smile over them. And I think that is the only thing that could actually make me up at night. Thank you.
Thank you, Solomon. That was very good. So just to wrap up, I just like to mention a key takeaways from talking to our panelists today. And one is that institutional investors in Kenya are looking to diversify their portfolios, and they are looking to consider long-term investment. However, they're looking to do so with less risk. They're looking to do so with credit enhancements, guarantees associated with those investments. And shorter term would be preferred, but that is not a deal breaker. provided the due diligence and legal and tax due diligence are positive for their consideration. We talked about the process that they take in making investment decisions. And for our two panelists here who are with pension schemes, their process have moved forward. And I believe from what I gathered, they're waiting for that right opportunity, and they are open to engaging and investing in the right opportunity that have the right criteria for their respective pension scheme. Also, they depend on their consultants and the fund managers to assist them with making investment decisions as well as with their due diligence process. And finally, they are open to co-investing with other pension schemes from outside of Kenya, and because they believe that that was strengthening relationships between both pension schemes in the US as well as in Africa. Well, at this point, I'd like to thank my panelists and to thank the audience out there who have been generous with their time in coming into our panel. This is Rosalind Spencer, Managing Director with MEDA Advisors in Washington, DC. Thank you so much.
Thank you.
Thank you. And good evening.
Good evening. Thank you, panelists.
Good afternoon, ladies and gentlemen. My name is Jonathan Stitchbury. I'm the Chief Executive Officer of Sanlam Investments East Africa Limited, which is an institutional investor operating in Kenya and Uganda. And I'm also the chairman of the Fund Managers Association, which is an association, as the name suggests, of fund management companies operating in Kenya, but many of them also have operations elsewhere in the region as well. And I think on behalf of the fund managers, I think we represent the vast majority of institutional assets that are available for investment certainly in Kenya, but also actually in Uganda as well. So out of the 1.5 trillion Kenyan shillings of investments that are managed by pension funds in Kenya, the majority of that would be managed by members of our industry association. And just to put that in context, 1.5 trillion shillings is around about $13 billion US. So I think the history of Kenyan investment in infrastructure is that there hasn't been great participation in the past from pension funds, despite the fact that they are probably the largest pool of captive capital in the region. And I think there's a number of reasons for that. First of all, the industry really only started about 20 years ago, and the investments that could be made were, fairly well prescribed. And what we've seen is that the vast majority of pension funds invest in traditional assets, for example, fixed income, government bonds, corporate debt, treasury bills, etc., with a much smaller amount invested in listed equities locally. The good news is that, or the bad news, whichever your perspective is that the vast majority of assets, I think about 98% of Kenyan pension fund assets are actually invested in East Africa. So there isn't a lot of investment outside the region. And I think part of the reason for that is that the returns have actually been quite strong. If you think about it, you can still buy a government bond in Kenya and Uganda yielding over 12%, which is a pretty attractive return when over the last few years, inflation has sort of been around about 5%, 5 or 6%. And so that has meant that it's squeezed out other types of investing. And so, for example, the amount of money invested in the pension fund sector, over 50% will be invested in government securities, whereas less than 0.5% will be invested in private equity. And when I say private equity, I also include infrastructure in that as well. So we have a long, long way to go before we see infrastructure and private equity becoming a more meaningful in the asset allocation of pension schemes. That said, I think there is a genuine desire on behalf of trustees to increase the amount they have invested in infrastructure in particular. And I guess the main problem is the lack of expertise in how to go about doing so. Traditionally or normally, for non-traditional assets, most investment policy statements in the region, which is the document which will ascertain how a pension scheme invests their assets, most of those investment policy statements will say that fund managers like ourselves do not have discretion on investing in non-traditional assets. And that means in reality is that the trustees have to make that decision. So clearly we've been doing a lot of work as an association in trying to upskill trustees so that they can help themselves to make these sort of difficult decisions. But I'm sure, as you all appreciate, investing in infrastructure is complex. Each deal is different, and the skills required to analyze each infrastructure project are quite specific. And so I think one of the challenges going forwards is how do we make that easier for pension fund trustees to make those decisions. I'm very pleased that an organization called KEPFIC has come into being, the Kenya Pension Fund Investment Consortium. And that really is a grouping of a number of large Kenyan pension schemes which have come together to try to figure out how, first of all, how to identify projects to invest in, and then to work out how to collectively collaborate to do so. Because another one of the challenges that we have in Kenya and in Uganda is scale. Although I mentioned the sort of $13 billion number before, the reality is in Kenya, there's about 1,300 pension schemes. The vast, vast majority, and I literally mean there's probably only 20 schemes, which could, maybe 30, that could consider doing infrastructure investments on their own part, given the typical ticket sizes involved. So I think one of the things we have to figure out is how can we commingle funds collectively to ensure, and also work together with other pension schemes to figure out how we can analyze these opportunities in infrastructure and how we can actually make those investments so that we spread the knowledge, we spread the cost of making those investments, and ultimately we increase our exposure to an asset class that pension fund trustees all, I think, recognize is exciting for them. They want to diversify. They want to contribute to the growth of Kenya's economy. And they recognize the fact that pension schemes can take a very long-term view, and they can think very long-term about cash flows as well, which is exactly, of course, some of the attractive points that we see in the infrastructure asset. So I think that's the main points that I'd like to say just now. Just to sum up, I don't think there is no barrier in terms of people's mindsets, trustees' mindsets. We have a barrier in terms of scale. We have a barrier in terms of knowledge, but these are surmountable with support. But my guess is it will take time for us to move to making more sustainable, more substantial investments in this asset class.
Bosley, I am one of the trustees of the New York City Employees Retirement System, which is one of the 5 retirement systems of the city of New York. My role as a New York City trustee, actually, I should even be even more clear. I am sitting for my principal, who is the president of Union Local 237. We are one of 3 unions that have a seat on the board. The rest of the board members consist of the 5 borough presidents, an individual representative from the mayor's office, and also an individual representing the comptroller's office, and also another individual representing the public advocate's office. Each of us have a vote on the board. However, the 3 union members have full votes. Everyone else, the other politicians, have 1/5 of a vote. What we do on the board is obviously we are engaged in overseeing investments for our individual retirement systems. However, we also are engaged in overseeing the operations of the individual retirement systems to ensure that the executives are running the retirement system as it should be. The retirement systems are controlled mostly by legislative pronouncements and rules and regulations. And it is from those promulgated rules that that the system is run, and the board oversees and make sure that the rules are followed, and that any necessary changes we inform the legislature of the need for certain changes. And we also have an element of discretion to make changes to the board. We're also assisted by a Bureau of Asset Management, which helps with their investment professionals. They give us advice, and they also do the actual investments of the 5 funds. Each of the retirement systems have our own set of consultants. We also have within that bucket, as I mentioned, which is the types of assets that we have. Some of us have individual consultants for each of those asset classes. And they give us a great deal of the information that we need as a board to assist us in making decisions and understanding what the liabilities and risks are for certain investments. They also oversee, meaning do due diligence along with the Bureau of Asset Management on any given firm that is being looked at a particular time to determine whether that firm is a fit for our portfolio. And then it is presented to the board with the information about the firm and why they think it's a good fit for our portfolio. And most asset classes, there needs to be a determination, meaning an acceptance and an understanding, or an agreement, I should say, between at least 2 consulting firms and the Bureau of Asset Management before a particular firm or asset management firm will be accepted and taken through the due process. Again, as an individual board member, I can also make recommendations to the board at a conference or through networking. If I find a firm that seems to have good qualities and may be a good fit for our portfolio, it is within my discretion to make that known to the Bureau of Asset Management in the particular asset class, the director of that class, and they have the option of further looking into it. And if they decide it's not a good fit, then they need to report back to me and let me know why they thought it wasn't a good fit. Or if they decide to look into it, then they'll go ahead and look into it. And that would be my engagement, and I would no longer be involved in that matter. Also, if I happen to run into what I think is a good investment, I can also pass that investment on to our consultants to have them take a look at it and decide whether they think it's something that should be further sent over to the Bureau of Asset Management for due diligence. And then once the Bureau of Asset Management does due diligence, then there would be a determination as to whether the consultants needed to do further due diligence on the matter. And if it's decided that through that due diligence, this seems to be a perfect fit for our portfolio, it would then come before the 5 retirement systems, and each of those systems would make a determination as to whether they wanted to invest in that particular firm, as it would be prorated allocations to each firm. Any firm deciding, retirement system, any system that decided they did not want to partake in that particular firm, the remaining assets could be reallocated to the other systems that decided they wanted to take and engage with this firm. That's pretty much it that I can think of. If there are any questions, please feel free to ask.
Hello, and thank you for attending today's event. I am Eric Ranskog, CEO of Malele Energy. I started working in Africa 25 years ago, and the continent has seen tremendous growth over this time and is now a place my family and I call home. In 2019, a group of former GE Africa executives, including Jay Ireland, the former CEO of GE Africa, launched Malele to assemble an unparalleled execution team that is uniquely positioned in Africa to capitalize on the continent's enormous opportunities. Our strategy is threefold. One, to build a collaborative and diverse team to identify and risk assess essential projects. Two, to deploy rapid development and execution capabilities to close projects and deliver the lowest cost energy for our customers. And three, to provide steady long-term returns for our investors. To do that, Malele Energy is raising $200 million from like-minded investors interested in driving long-term sustainable yields from projects that maximize social, economic, and environmental impact. We have already acquired a majority stake in an 85 megawatt project nearing financial close in Sierra Leone that recently received approval for a $217 million loan from the USDFC. We have a diverse investment pipeline of proprietary operating and development deals across Africa ready for new investment. Malele is a Swahili word that means everlasting. We at Malele know that to best serve the interests of our customers, employees, and our investors, we need to be here for today, tomorrow, and the future, everlasting. So thank you for attending today's event, and welcome to Malele Energy, where we bring our passion and proven capabilities to provide Africa and our investors the clean energy to grow stronger together. Have a good day. Thank you.